Hi there, ladies and gentlemen. Welcome to Capital A Trading. I'm excited to announce today you're going to be going through one of my advanced education lessons. So this is going to be in my mentorship program. It's going to be called Institutional Candles. I'm going to show you what the big banks, what the financial institutions do in the market, how you can pick up on the little clues that they leave, and then how you can catch an investment opportunity from it. So again, as we're going through my website here, you can head over to the services, check out the mentorship program page, read more about what's on offer to you, and then of course if you're interested, you can join me for the 3 to 4 month program where I then look to build up your skills and show you how you can then catch on to some investment opportunities. If that sounds good to you, if you trade, if you take investments, check out my website www.capitalatrading.co.uk. There's a lot of cool features on there, and again, there's some more stuff about the advanced program. If you want to learn more, that would be my advice. You can send me an email to capitalatrading@hotmail.com. Now, with that being said, let's get straight into the lesson. My first piece of advice will be grab a pen, grab a notepad, take some notes. There's some really important information in this video. Enjoy.
Okay, ladies and gentlemen, so this is how the lessons run. Let's get into it. It's institutional candles. So first of all, I'll just take you through a little intro, take you through some of the talking points that we're going to go through. So again, I'll be explaining what the eye candle is, how to identify it. We'll be looking at some more examples. We'll be understanding the eye candle, understanding it on all the time frames, and then of course, learning how to scale down through them time frames. Let's get into it. So the eye candle. The eye candle, when identified, leaves a clue in an area price could reverse. We mark this candle and monitor how the price reacts to it. The eye candle will give us a signal as to when a major player, the big banks, the financial institutions, have stepped into the market. So the eye candle is a candle that does something out of the ordinary. So it will take liquidity, which has a huge significance in the market. I want you to think of it like this, as you're about to see an example in the market. The market's moving quite slow, not really fluctuating, not really going anywhere. Then all of a sudden, within a couple of hours, shoots up into a specific area and then turns around. This is the market makers grabbing money from the retail traders, grabbing where they have placed their stop losses. It's important you have an understanding of the areas people will trade and how the market makers breach these areas. After many long hours of watching these charts, I see these candles that would shoot to a certain area on the charts really fast. I began to gain an understanding of why these things happen at certain times of the day and around certain news events. So if you've got an interest rate decision coming up, you'd see it happen in a more faster. It would happen a lot quicker. These candles that do these things need to be paid close attention to, as it can only be the financial institutions that move the market like this. So in this picture, over to the left here, above my blue line, price is creating a liquidity area. There'll be lots of traders, lots of investors placing their stop losses, placing buy stops, all of these things that create huge amounts of liquidity in that area. Now, the key is to understand how the institutions wipe out that area and take people out of the market. And what they've done, if they've done it in this highlighted yellow candle. So what I can see is price hasn't reached up above this blue line for ages. And then all of a sudden, this is the candle that goes up there, does the most damage, and then price starts to turn around from that point. The eye candle is highlighted yellow and will now be where we aim to take a sell from. So now we've moved over to the other side. We're going to see how it progresses. And as you can see, price comes back to the base of the eye candle. And then we get a whole new transaction, a whole new move from that point. The perfect entry for the sell, it came around 12 days later for what would be a very profitable trade from the eye candle, understanding its relevance and how you could catch an investment opportunity from it. So this is the same trade setup. It's on a daily time frame now. We were just looking at the 4 hour, and I'm monitoring this time frame allows you to refine the area down to one certain candle. So you can see now how this is the day that they went up, grabbed the area, grabbed the money, grabbed all the liquidity up there, and then it started to turn around and returned at a later date. So again, similar to the last picture now, price has created some liquidity to the left, and the eye candle is the one that taps into this area before price moves the other way. So again, lots of liquidity building up. Lots of traders are placing stop losses under this black line. All of a sudden, a candle ferociously dips into the area and starts to turn price around. That allows me to know the market makers are here, they've done something, and I've got an area that I can be confident on taking a buy from. So as you can see, it was the perfect buy entry from that eye candle. Again, with the patience you're going to need, it took around 16 days to return, and then you get a perfect trading opportunity. And again, it's always important to understand the picture on the higher time frame when analyzing the eye candle. This is the same trade setup again on the daily. So we looked at the 4 hour, we're now looking at the daily. You can see the area where they've grabbed the liquidity, started to turn price around. There's even a little structure break there, and then price comes back to the level and makes a monstrous move to the upside for around 1,000 pips. The daily time frame is showing that structure broke from that eye candle area, and now I've got 2 powerful reasons to watch this level, to take this trade here. It's very important you understand the picture on multiple time frames rather than just the one. You need to look for the candle that grabs the liquidity. This is the one where the financial institutions have stepped in and manipulated the market. When monitoring this, I am now looking for the eye candle, and I've highlighted the area where I could possibly catch a trade. So under this level here, lots of buy pushes from this level. And what you're looking for is to see the institutions come in, dip into the area, and instantly turn the price around. What they've done now is come back to that level, create a whole new buying opportunity, and then it starts making its move to the upside. All from understanding where the eye candle is, where they've stepped into the market, and what they're going to do possibly in the near future. So here's the picture on the 4 hour time frame. I'm just breaking it down a little bit now. And as you can see, price plays perfectly back into our target area for a perfect buy entry. I have a good entry area, and I've got equal high above. Again, letting me know that price wants to come up to this point at some stage due to my understanding of the amount of liquidity that's building up. So I've got a good entry point. I've got a good exit point. Again, a very, very vital thing to have when taking on any investment. And again, I'm just breaking down the time frames now, showing you everything we've just seen, but with more data. This is the 2 hour time frame. It's important to analyze the eye candle on a few time frames. The higher time frames are generally to get an understanding of the direction. The lower time frame is more about refining your entry into the market. And again, more reasons, more things building up. We've got the equal high. We've got the break of structure that happened. And of course, price then dips back into a Fibonacci area, which is where we would be happy to take a buy. Again, more reasons to understand what's going on. As always, it's important to have many reasons that you're going to enter a trade. Just going over a few things we've learned already about equal highs, liquidity, and the session candles, the trading sessions. New York opened here and then came back the next day for another move to the upside, all happening around a similar time of the day. So the power of the eye candle, this formation that we see in the charts is very powerful, and being able to see this for yourself will provide very strong investment opportunities. When the eye candle has formed and you mark out the areas, this creates a strong case for the buy to sell scenario for you to take advantage of. It's important, as you've seen me going through the time frames, to scale down from the high to low to really see where price reacted from and gain a clearer picture on what the market makers have done. What makes an eye candle then? It will turn the price around. So if it's heading up, if price is heading up and then it turns around all of a sudden, the market makers are the only ones that can do that. So they would have had to step in, which means there's an institutional candle somewhere in that area. A candle that grabs liquidity, the ones that you show me showing where it dips down, that is also going to be classed as an eye candle, because it's only them that can come down and raid them areas the way they do. And of course, a session candle, if a candle opens up at 8 a.m., it needs to be paid attention to, because that's the same time that the market makers start their work. Okay, so now we're going to look at an eye candle on the weekly time frame and work our way down to pinpointing a trading opportunity. So as you can see here, this is the highest candle on the chart, on the picture. So this is where price has turned around from. Now, as I go through the time frames, it should become a little bit more clearer as to where we could have caught on to a trading opportunity. This is the daily time frame. And again, as you can see, price seems to dip back into the middle of this highlighted yellow candle and then starts to make its move to the downside. As I get onto the 4 hour now, you will start to see the eye candle a bit more clearer. You will see where they came back to it and started to make that movement to the downside. And as I get onto the 2 hour time frame, you should notice how the area has slightly changed from that 4 hour whole candle. I've now got a candle that's above it, which is now obviously split in half because it's two hour candles. And it now allows us to see where the entry is going to come from. And that's how you can get a nice pinpoint entry on a trade. So this was all the same candle in the same area, but it's important to know how you would scale down through the time frames to refine exactly where the market makers did something in the market. We have the weekly, the daily, the 4 hour and the 2 hour candles, but notice how from the 4 hour to the 2 hour, you can actually see how the focus would change to the candle slightly higher. That's the importance of scaling down through the time frames so you can pinpoint where it would be worthy of taking an entry into the market. Okay, so above this yellow box now, there is a mass amounts of liquidity building up. Knowing this information, we are now simply looking for the first candle that dips into this massive pool of liquidity. So there's loads of money swimming around up here, and the market makers have just come to absorb it. So this is the eye candle in this scenario, okay? Highlighted red in that small black candle here. Something has happened, something has been cooked for price to then go flying up there. They've done something at this level to make price do that, okay? Now, as you can see, notice how the eye candle was created. It created a little range for price and then has a move to the upside. From that same area that the eye candle opened, the price came down, played off that small bearish down candle before the big impulsive bullish up candle. And then we even get price retesting the level and going again, all by understanding what the market makers are doing. Okay, so what is the eye candle in this picture? Was it the one that's at the top and turned the market round? It's this one here, the one that's grabbed the most liquidity. And essentially, this is the one that's turned the market around. So I've highlighted it. I've marked up. I want to see what's going to happen from the base of that candle. Now, as you will see, price comes back a couple of days later and makes a move from the base of that candle. Sometimes in trading, you may feel you're waiting on an area here and you see price just below it and then it goes. That's all from understanding what is the relevant eye candle. And again, I'm just giving you a 2 hour picture just so it looks a bit more clearer as to where we could have caught on to a trading opportunity. Again, for those who know about market gaps and the eye candle, it was a good investment opportunity. The importance of the eye candle. This is why it's important you are confident in scaling through the time frames to be able to see where this piece of price action has happened clearly. I'll be testing you in a different way to make sure you are good at doing this, as it is a very vital skill when reading the charts.
Okay, ladies and gentlemen, thanks for watching. I hope you enjoyed that. Again, if you learned something, if you feel like you've improved, leave me a comment, leave a thumbs up. Let me know what you thought. Let me know what you learned. Let me know what's been brought to your attention. I'll be interested to know. So that was institutional candles. That was how the market makers do little things, absorb liquidity from the retail, and how they then go and create their own transactions, and how you could possibly catch on to some of them investment opportunities. So again, thanks for watching. Make sure you subscribe to the channel. Check out the Forex Weeklies out every Sunday. Check out the case studies where I go in depth about a trade and show you how I caught the investment in a bit more detail. So again, if you're a trader, if you're an investor, this is the place to be to further your trading. Thanks for watching. I'll see you next week.
Bye, have a great time.